I always trade my system, but this year I am just laser focused on the Edge Finder has substantially improved over the years. More and more data is factoring into these scores. I am going to be trading very closely just what I see on the Edge Finder this year. That is what I'm going to plan on doing. We lost the indices story and have picked up the metals story. The metals story, I got to show you guys something. After the news, I want to show you a new score, a way of tracking the score on the Edge Finder that we're working on. This is heavily requested. We have a new way of looking at historical scores for the Edge Finder. If you want to backtest the Edge Finder, this is an incredible way to do so. If you want to go see when scores got bullish or bearish on things, I'll show you some of that in the next few minutes. But like I said, if you would like to speak directly to our support team, if you want to join our VIP group, you can see every signal that we're sharing. We'll drop the link one more time in the chat if that's something that you're interested in. We've got just about a minute to go here, guys, before we get retail sales, which could move markets. We also potentially have Trump speaking today, or we have Trump speaking today. That could potentially be market moving as well, as it was yesterday. Let me go ahead and switch over to our all markets view with 30 seconds to go before retail sales. We'll see if this moves the market at all here this morning. Okay, so let's go ahead and roll our breaking news coming in. Okay, so on your screen, you've got stocks over here, gold here, Bitcoin here, dollar index here, and oil in the bottom right. With just a couple seconds to go, let's see if retail sales causes any movement this morning. Okay, dollar index is lower here slightly. Let's take a look at core retail sales, substantial miss here, minus 0.4% compared to forecasted 0.3% month over month growth. Retail sales, look at that slide, guys, minus 0.9%. That's a pretty substantial move lower here. You've got stocks a little mixed on that. Dollar index definitely lower on that with cooling retail sales numbers. That's following, by the way, retail sales numbers that last time were also downbeat, if that is a word, instead of upbeat, right? So if we take a look at the US economic heat map, last time around retail sales month over month was weak. Now it's going to come in even weaker. So retail sales showing some serious decline here, guys. That is worth mentioning and reinforces once more my positioning in metals. I like that a lot. Cooling retail, a cooling consumer should be bullish for metals. Gold, you can see now in the positive here today, went red to green here. Silver continuing to hold those gains so far. We'll see how that closes out today. A 3.1% gain for silver on the day. Not bad. Let's also take a look at yields. Did that impact anything? It absolutely did. Yields lower. TLT should benefit from that. There we go, guys. It's been a good trading week. We got TLT up, silver up. Those are my two largest positions by far. Dollar index lower here today. Look at that. Dollar index definitely losing the steam that it had, guys. There we go. Dollar index. And this is, this is a good thing if you're a metals bull, if you're a stock market bull, if you're invested in anything that's rate sensitive. I would imagine real estate would like these numbers. Actually, I don't know. It's kind of mixed. I was going to say real estate stocks do like lower interest rates, but a consumer that's hurting too much would also not be good. So a little mixed bag for indices. But again, rates lower. Look at that. The 20-year yield, 10-year yield, both lower here this morning. We're at a 4.5% yield for the 10-year government bond yield. So that is a drop there. TLT, like I said, jumping on this. Metals should also benefit from uncertainty in the consumer. I am going to beat a dead horse here and continuously say this over and over, so I apologize. Knowing your environment is the key to 2025 trading. If you do not know the environment that you are in, you are going to be running in circles.
With Pulver Alerts, you get access to the complete log of all of Chris Pulver's trades. But who is Chris Pulver? Chris has over 20 years of trading experience and he's a licensed money manager. He trades all aspects of the market, including Forex, stocks, ETFs and futures, crypto, commodities, and just about everything else. Let's talk more about where you can find these trades. Inside of the A1 Trading Discord, on the left-hand side, you'll find Chris's section. It's broken up into different categories to make it easier to find the trades you're most interested in. Here, you can browse his trading journal, where he shares videos and general market analysis, his indice trades, commodity trades, Forex, stock and options, and his futures trades. All trades come with analysis, including entries and exits, risk to reward, and more. We're very excited for the future of Pulver Alerts, and we hope you are too.
On the show here for our session that we do every week, Fundamental Fridays, to discuss the latest data in markets, but also talking about the charts, momentum, where are we at? So Kenzo, talk to me about what your thoughts are here this week. We had some interesting data, right? We had CPI and PPI both come in higher than expected. We had, again, also this morning, retail sales numbers came in a little bit not exciting. How are you feeling about indices? Are you still feeling like they have upside, or are you a little cautious here?
I'm actually, because most of the events, they're still positive, which shows higher inflation. But I think the good news comes from the tariffs. I don't know if maybe you did check tariffs when Trump was actually talking about them. They were not, some of them, they are not going to be implemented immediately. And he seems to be going not really aggressive as before. He started from the bigger number, but the number that is going to settle at is actually quite smaller. And that is actually a good thing. And I think we see that with the market, or let's say indices, they ignored whatever that we received, especially this week, because I was expecting some serious reversal, especially when they say, especially when we see some positive economic news. But it seems like the market doesn't really care. Even today, retail sales, they were a little bit weaker. I thought maybe I was going to see some aggressive moves, but not really. But I think the move comes from the tariffs, but it's much better because we can see the weakness on the dollar, and that might be a very nice thing to see.
Yeah, I mean, we had core retail sales missing expectations by a long shot here. Same thing with retail sales. It's a pretty volatile report, it seems like, Kenzo. In general, the retail sales numbers seem like they sometimes fall very far from forecasts. Minus, what is that, a 0.7% miss in retail sales month over month, and a 0.7 miss in core retail sales as well. So, here's the difficult thing about all this, though, Kenzo, is like we had all this economic data here this week, and what really confused a lot of traders is that what also moved the markets substantially, especially yesterday. I think we would actually be seeing the S&P 500 down somewhere like here, and the NASDAQ lower as well, had we not heard from Trump yesterday, which Trump basically, the high-level recap was, he was talking about tariffs, but he basically said they're not, there's going to be some time before they come out. And that time is bullish for the market, because they say, okay, well, if we have time to prepare for tariffs, it may be less, threatening to the economic situation, and we're at least in the clear for today. So the market jumped off of that. Same thing with the NASDAQ, was up really high yesterday. So I don't know, it makes things a little difficult here, because you have economic data maybe souring a little bit for the inflation story. Yields were popping, but then again, you have some counter force in play here with the retail sales number this morning, clearly moving things lower on yields, which of course stocks like that, but then also Trump's commentary on tariffs perhaps being a little bit less scary than previously thought. So I don't know, how do you trade around that? How do you trade around tariff concerns and then Trump commentary? I mean, he's speaking again today. Does it play any part in what you do in the markets?
Yes, the best thing is to make sure that maybe is to get, to be always up to date But what I know is the stock market is quite strong. Let's say it's quite bullish. So the only thing that it's actually stopping the market to move very nice, it's like we're still trying to hear what's really going to happen with the tariffs, because we know that they're going to make the currency to be quite stronger, slowly increasing the inflation, and the companies, they don't really want that.
Sure.
But unfortunately, all these things happens when those companies are still performing very well. So to sell, they're not gonna actually just sell and aggressively. So which means we will need something which is going to be surprising, like seriously surprising. Like if he comes with let's say 25 on other products which actually correlate with the indices. But at the moment, it seems like we're not actually, whatever that they're adding on the tariffs, they don't really hurt the stock market that much. But I think maybe in the long run, it might not really look good, because especially when maybe Powell says they don't really see any cut coming sooner, that might not really be nice. But the thing is, when we are traders or investors, most likely we look for long term. What might happen in 6 months? So most likely we know that the companies will be performing very well. So which means now it's all about mostly fundamental, and also your technical will work here and there. But I think by understanding what's really happening this week, next month, it will actually help us. At the end of the day, I still believe that we are still going to be on a bullish move unless we have something surprising. I think maybe the market already digested the issue of tariffs. It seems like it's no longer really much of an issue. But for now, we just have to wait and see. I'm just waiting for for that resistance to be broken out. If that doesn't really happen, maybe we will see a reversal.
Yeah, Kenzo, that's a great point about the uncertainty of tariffs. Most likely, I would agree. Like the big picture here for this year should be, in my opinion, higher prices for stocks. They should continue to do well. We may get some hiccups. We may get some sell-offs in the meantime with the tariff news. And I want to talk about gold in just a second. I also just want to answer Omar in the chat says, what's the price of the heat map? If you'd like information about the software, we'll drop a link to where you can chat to our support team. They can give you information about all the different features, the pricing options, payment plans, things like that. So we'll drop the link here in the chat for you if you'd like to speak with us. So Kenzo, bringing back that conversation about tariffs for a second, I think that yesterday's commentary from Trump and all of this commentary about tariffs continues to make a very good story for metals. I actually want to add something to the thought process here. So yesterday, Trump said that tariffs are coming, but clearly there's been a kind of a sigh of relief from markets because tariffs are still coming, but they're not coming out fast. Like we've got some time between when we get some answers on that. Here's my opinion. That actually is good for metals because it's still an uncertainty that we all have in the back of our minds. What is Trump going to do? What are tariffs going to look like? We do know that that Trump is a volatile person. Whether you like him or dislike him, he comes in swinging with whatever he has to say. And so if he comes out and he says, I don't like the way the call went with so-and-so, and we're going to do this tariff, or like that can be around any corner. So the market simply having that uncertainty makes me think that could continue to be a bullish thing for metals, which benefit as an alternative to stocks for people who are uncertain and don't want to play that guessing game of what's going to happen next with tariffs. I think that's why gold and silver have been doing quite well recently, and why I think that they can continue to work and they can continue to do well. We have momentum here, right? Like this is the story that's working clearly. If you look at the NASDAQ, this is not we've had a nice rebound here recently. And perhaps, like you're saying, the bigger picture, I would agree, is bullish for this. Perhaps we get NVIDIA earnings and they're rock star. Okay, now we have a catalyst to potentially continue the story. But for me, the story right now that makes sense is we don't know what's coming with tariffs, and that uncertainty makes gold attractive. Are you still bullish on gold, and do you have any positions or willingness to buy gold or silver?
Yes, 100%, especially on gold. It seems like the guessing game that we have with Trump actually is the fuel for gold to go high, or maybe let's say most of these commodities, or let's say gold and silver and the other ones. So as there are going to be tariffs on the metals, obviously we are going to see higher prices. So I think yesterday I saw it was silver or something, it was up like 2%. So we can easily see that yes, it's going to push higher until we have the conclusion, and after that we are going to know that okay, if things are going to be like this, we are going to see a continuation of a trend or maybe a reversal. On my side, I can say it's actually overbought technically, but when we check fundamental, it seems like there's still enough room for the market to actually go higher, you see. But on my technical analysis, I wish if maybe there was going to be a reversal so that I can get in.
Yeah, I feel the same way with gold. If we do happen to get a larger pullback on gold, I'm definitely looking to potentially be a buyer, especially if you get down to this area of support, as long as the fundamental story still checks out. Speaking of that fundamental story, I know you and I, Kenzo, you're a fan of the heat map as well. This has changed a lot since we last looked at it together. Things have gotten they've gone really red where they used to be very blue. So specifically, today, this data has not yet updated, but it will soon. But it's still relevant because we missed retail sales last time around. We missed them again here today. Core CPI and CPI and PPI this week were all hotter than expected, coming in red, as indicating this is more concerning and risk off. Jobs data was pretty good, right? So you had unemployment claims came in a little better than expected. Unemployment rate was good. Jobs data, NFP, was a little bit of a miss, but when considering revisions, it was positive. But then JOLTS job openings missed expectations. So what we're doing here is we're summarizing, as you just mentioned, the overall kind of fundamental outlook here, and we have GDP missing expectations, services missing expectations. So the point is, we have mostly red on the screen here, which points us towards an environment where growth is not weak right now. Growth is still strong, but it's weaker than it was expected to be. So if we continue to see growth deteriorating, we could actually tilt into this environment, which is more stagflation, where you have inflation rising and growth faltering. Now, I wouldn't say that we're there at this time, but it is possible that you're seeing a bit of a shift where some of our growth metrics here, according to forecasts, are missing expectations. And following suit here today, we see retail sales coming in lower than expected. So yeah, I agree with you. I think that the environment technically for gold may have room to pull back, but the macro, the fundamental setup still seems like it has a good basis to continue a bullish move. Right now, we just recently had, this is the latest AAII investor sentiment survey. This is a survey that shows how market participants, market traders are feeling about the stock market. This is specifically for S&P 500 and how people are feeling. This is very interesting. People right now are scared. 47.3%. That is a recent high in terms of bearishness. So people reported on this survey saying they felt bearish about the markets at a very high rate. In fact, that is a multiple month low in terms of bullishness, or I'm sorry, high in terms of bearishness, and bulls are a little bit scared too. So worth mentioning this because, again, when you have this consolidation here recently and people are starting to feel bearish, I would actually say that this would be potentially a bullish indicator. Like when you have everybody scared, if you do get a breakout, perhaps there's a bit of a rush back into stocks. But it does just show you, if you're looking at this from a gold trader's perspective, there's a lot of fear here. That helps the story for gold. People are uncertain about what's happening there, and maybe they want to kind of run away from that fear by buying something like gold or defensive stocks, maybe the Dow Jones, maybe they want to move into something, maybe they're cash heavy. That's another way to read this chart, is that sentiment is somewhat concerned right now in the markets. This is also another very important tool. This is investor sentiment. We talk about, economic data quite a bit here on our sessions, Kenzo, but we also, of course, have sentiment, right? The put to call ratio. gives us some interesting stuff when we look at S&P 500. People are getting a little bit more cautious. There's not as much of a demand for calls as there was over here, right? So when this chart gets very low, people are buying calls aggressively, and when it gets higher, people are buying more puts, or it's evenly distributed between extreme fear and extreme greed. So we're seeing somewhere in the middle right now for the put to call ratio on the options market. So lots of stuff to look at here. Sentiment is very important. It does seem like market participants are a little bit more on the nervous side here recently, Kenzo.
Everything just looks good, man, on the system. So I think it just summarizes everything very nice, especially here on a sentiment survey. It looks good, and I think this is what I was trying to explain, but you can't actually put into words because there's so much stuff happening. But here, at least, you can by these bars, you can easily see or understand what's really happening. You see. So it's like there is no one, or there's no like more than 60% which is looking for buy or selling. So it means we are mostly on the neutral phase, or let's say the market is mostly consolidating at the moment. But I think everyone should get this. And if for those who don't really have that, I think it can actually help. It just summarizes everything very nice, man.
CPI news this week, PPI news this week. Nobody seems to give a crap about higher inflation. Certainly the Fed doesn't. They're just kicking the can down the road for how much longer they're going to wait to possibly cut one time this year, not twice. That's looking like the highest probability. So pretty interesting week overall. Seems like the market doesn't give a crap. But I said yesterday in my final hour sessions on YouTube late in the day before the close, today's daily close and today's weekly close will be important. Monday's a holiday with President's Day. No markets are open. So we've seen the vulnerability of the markets over the weekends. Is there anything that happens this weekend that is going to make it an unfun event for Tuesday's open? I don't know. Futures market, I'm thinking limited hours with President's Day on Monday being closed. So maybe it's Sunday to Monday. Maybe it's not. I'm not really sure. I'll have to check on the futures market hours. But look, one thing I thought was interesting this week was seeing higher inflation data. Okay. So we have CPI, PPI, we have core PCE coming out, not next week, but I think the week after. So I think the final week should be this week here. 1, 2, 3, 4, 5. What am I doing? All right, go to that week. There we go. I'm looking for core PCE. There it is. So Friday the 28th. The last part of the year. There's no leap year this year, right? Is this a leap year? No. Okay, so that's the end of the month. And there's no forecast for it, but that's going to be the big reading, like the official Fed inflation marker, like his core PC going down. Anyway, here's what we're seeing. Okay, so your yearly CPI continues to not go the right direction. So we came in 3%. That's a slightly higher histogram. This trend continues to go higher. Change the color here. Okay, so we're trending higher. 3% on year-over-year CPI is literally no different than where we had this bottom in July of 2023. So kind of nuts that a year and a half ago, we were at the same level that we are right now. You know, and we've been told this entire time, target inflation rate, that's perfect that they have it on the edge finder here. Target inflation rate, 2%. Are we there? Nope. Is it a real target? Not really, but that's what the Fed's going to continue to tell us. So one thing I thought was interesting on the third party side is Truflation continues to look like it's trending lower. Okay. So I do wonder, like, if our CPI news and data points that we'll see, it's certainly not February, because this month everything printed higher from January, right? So February prints from January's data. But I wonder if this recent move to the downside will start to be reflected in next month. So when we print March's CPI and PPI, will that be reflected in February? And this is a little bit more of the reality of like, okay, you know, we are trending again to the downside. We are starting to improve. Maybe, right? But we're still not back to the lows we had back in September. It'd be pretty nice to see it get there, even if we have a type of move like this with inflation. If we go from this kind of roller coaster ride before we trended lower, if we have the same type of thing, you know, we go back down to the lows, maybe we go sideways a little bit, And if we do actually eclipse that 2.4 later this year, I just don't know how long it's going to take. I'm seeing economists now showing like end of the year 2025, maybe getting to like 2.25. So, whatever. We'll get there or we're not. I don't know. I expect higher for longer. PPI data looks even worse. So the trend on PPI data has been a lot sharper. We bottomed out here. Same thing here. Look at how low this was July of 2023 to now, like way higher. Okay. Bottoming out in September. We've been going higher since September last year. The one promising sign for the markets, two of the big watch list items would be the dollar index and the U.S. 10-year yield. And the U.S. 10-year yield has been showing signs of dropping. It's still not to fresh lows, so it is quite different. Okay, dollar's making fresh lows the last 3 days. So we have 1, 2, 3, nice sharp move to the downside. These last 2 days have come back to retest lows from January, and we're back below that. I still think the dollar catches a bid in here around the 106 to 105.50 handle. So if you are short the dollar or long currencies against the dollar, so for example, I have a trade running on Aussie dollar that's up a few bucks. I think I might just take the profit. I talked about this one earlier. I'm just going to take the profit. I'm going to close out my Aussie dollar longs. That was 1, 2, 3 positions. So I took one small loss and I had 2 winners. For a net profit, I'm just going to close that out for a win. And then I'll take the buy down here at 60.20. I'll still leave that one. So I'm going to keep this one going. 60.20 is still be a pending buy order. There. I'll take that pending buy at 60.20. And then the Kiwi dollar is back to break even for me. So I'm going to keep that one open. On break even, I'm going to try to get this one up a little bit higher. If we hit between 58 and 58.50, I'll take some profit on my Kiwi dollar. But I am out of dollar CAD. We're finally starting to go lower. This was an unfortunate, fake out by the dollar CAD, but I'm not surprised that we are actually dropping. Is anybody surprised that the dollar CAD is dropping? So I was long on like 10 positions, hit my 4,500 target. We had that fake out spike. That was just a big liquidity grab by the market. And it's not a surprise that the market is dropping like that. This is a perfect textbook definition of why Forex traders struggle, right? Because what happens with Forex traders? Well, they see the dollar CAD is topping here, so they want to look to sell, and they put a stop loss right there. And what happens? Get spiked by 100+ pips. And yet it still goes the way you wanted it to go, but your liquidity is part of the game. So if you had a stop loss at 45.50, you're like, surely I'm dead wrong if it goes 50 pips above 4,500. Well, it went 100 pips above it, and then it went 66 pips above it, and then it went 290 pips above it, and it still proceeded to go down. So the trade was still short the dollar CAD at the 4,500 handle, and also look at the same highs we saw for these last couple years. So the lesson here is trade smaller, trade the area. A sell here and a sell here turned out to be the right trade, did it not? Sell once, sell twice, price goes your way. Now you're in profit. Now the game is fun. As opposed to you sell here, put a stop loss, you get poked. Put another trade in, you get stop loss, you get poked. Like that happens so many times in futures and in Forex. Until you learn how to trade a little bit smaller to work these areas better, you're going to continue to be the trader that says the price went my way after I got stopped out. It's a hard lesson, right? But my point is, if you trade small and you give price the flexibility that it needs, this is what happens. You sell here, you put a pending order at these highs, you get spiked in during the weekend, which is a crazy time to do it, but price in fact goes your way. Now you have one entry that is now up probably 300 to 400 pips and another entry that's up 400 to 500 pips. And you survive the nonsense, you survive the noise, and now you're sitting in a bunch of profit. Right? So if anybody has any questions on that, that's how I trade. I trade small and I build positions in areas because it's crap like this that drives traders out of the market all the time. This is why futures traders can't survive. This is why Forex traders can't survive, because the games that get played with liquidity, it happens all the time. This is also why I trade options, because if I just said, you know what, I'm going to do a bear call spread on the dollar CAD where I can sell a call here, buy a call here, and as long as price stays below this by a certain date, I make money. It doesn't matter that the price spiked up. Doesn't matter that it took, 2 weeks to do it. As long as my expiration is out far enough, I'm in profit right now in my entire position. If I had a bear call spread, and again, I don't do this on a dollar CAD because it's not a thing. But my point is, this is why I trade options on instruments, because I can set up a trade like that where the spikes don't matter. There are no liquidity hunts because my line in the sand is defined and fixed, and price can go above it or below it. It doesn't matter. It doesn't change, right? So anyway, just food for thought. But it's nice to see the dollar weakening. It's nice to see the 10-year yield giving up some gains. Gold, it's actually nice to see that silver is taking a nice leg higher and is probably, like we've been talking about the last couple of weeks, which would be your silver versus gold chart. Look at this one. We spiked up here not that long ago. Look at this resistance. This is such a good chart. Gold versus silver, such a good chart. Good resistance showing that, look, they can both go higher, but I'd like to see silver go higher faster, right? And so silver right now is outperforming. So XEUUSD, gold is showing us a red candle today, and silver is making a nice big spike up here towards 33.40. Faded a little bit, but that's fine. I think this silver trade looks really good to get back up to these highs at 34.85. Hopefully getting to a symmetry target for me, which is 35.88. I'm still long on SI futures, and I'm long SLV. Bitcoin, surprisingly, not doing much. Bitcoin is extremely quiet considering there's some stocks moving out there. We've got MicroStrategy still the same. Earnings came in terrible, but it's not traded like a tech stock. It's traded like Bitcoin. So I'm looking to see if this either comes down to find some dynamic support with the moving averages or stays here based around this like 305 level, 300 level. Coinbase, I took some profit on Coinbase this week. We ended up going right back down to the move that I started with, so I'm glad I'm out of that trade for a win. We poked up right to my liquidity level at $300. Ethereum still needs to get its act together. I think we have to wait for a trendline break in Ethereum before we get long on that one. Copper is still looking really good because China is going nuts. Now, copper dropping aggressively today, I'm actually okay with that. China had a nice run. We had Alibaba gapping higher. I added some more shares in Baidu today, which, again, I'm good with. Like, I think China has good upside. I know everyone's been saying for the last couple of years it's been uninvestable. Nobody trusts it. I get it. Like, I'm trading China with like eyes wide open, very small risk, but I think the technicals look pretty promising. So I'm long on Alibaba and Baidu. And as long as we don't have like some, AI cyber war type thing that like raises all these geopolitical tensions, right now it's like, look, there's an arms race, and it's not just US. Like, China's going AI, Europe's going AI. The world is now like, the buzzword of AI is front and center. So maybe that's what keeps the markets afloat in 2025. It's just like everyone's just spending money trying to improve their energy efficiency. And I mean, whatever it means, is it good for tech? Maybe. Are we going to show that we can't handle some of the demands that are being seen by AI? Maybe, right? Maybe we don't have enough. Maybe we're not spending enough. But until it's like price right now seems to be pretty supportive. But copper, that's a pretty big drop on copper today. I don't know if there's heavy profit targets here. Or just look for price to cooperate. So we have a nice little swing trade. If we pull back at all with some type of bull flag, I think copper still looks good to the upside. I do have a trade down here for a little profit. I'm just looking to see if copper just kind of stays elevated. Again, you got to watch China. We'll have actually more stimulus-related news out of China in March, whether they are or are not going to be continuing to support the property markets and support their capital markets. So if they want to keep animal spirits high, then hopefully March is another round of at least massaging the message or actually adding more stimulus into the economy. Euro dollar, you might as well look at dollar index, because if dollar index is down, euro dollar is up. So there's euro dollar. Boom. It's the exact opposite of the dollar index. Flip it around. There's euro dollar. Okay. Euro dollar to me is still pretty limited to 106. If we have any upside here, 105.50 to 106, I would still be looking at a level to reject. Okay, so I don't see the euro dollar necessarily getting above 106 and sustaining a move higher, unless we are really, really, really going down in the dollar. But I can see the dollar index pulling back to 106 or 105. I can see the euro dollar pulling back to this 106 handle. But if that gets rejected, we are probably heading back down to lows. So what happens then? Well, the dollar index would be bouncing back up. Is that good for the markets? Maybe, maybe not. Probably not. What happens to gold if the dollar gets strong again? I don't know. So euro dollar is the inverse. All right, what else? Gold. I'm fine with gold getting a pullback. I'm like craving a pullback on gold. Give me something, man. Silver is totally fine. I build a lot of my positions based on this low as well as that $26 low. Bitcoin, like we said, not much happening there. Copper, you got to watch China. Japan, still just absolute nonsense sideways. Japanese yen, a lot of volatility this week. We had a really weak 3 days, and the last couple of days have been okay. We're kind of stuck right in the middle. I'm still long on Japanese yen futures.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.